From the following information, complete the balance sheet of Bindal and Company as on 31st March 2020. We've been given gross profit, which is 25% of sales. On it, I'm going to use as much place as possible around the question. Okay, and let's see. If necessary, we will scroll down. Okay, so gross profit ratio. Gross profit ratio is equal to gross profit upon sales into 100. Okay, in this particular question, we've been given the gross profit ratio, which is 25. We've been given the gross profit, which is 1,20,000, and we can solve for sales. Okay, so sales is division, goes that side, it becomes multiplication on it, so it ends up being sales is equal to 1,20,000 into 100 upon 25. Okay, so sales is going to be equal to 4,80,000. 4,80,000. Now, equity shareholders funds, they have told us is 20,000, and that should be a number for capital, but I'm not doing it yet. Let's just see what else has been given to us. Now, we also know that cost of sales, okay, we've got cost of sales, the cost of goods sold, one and the same. Cost of sales plus gross profit is equal to sales. If I know the sales is 4,80,000 and I know that the gross profit is 1,20,000, then I also know what is the cost of sales. Okay, so 4,80,000 minus 1,20,000, which is going to give me 3,60,000. So 3,60,000 is my cost of sales, and now they're saying that credit sales to total sales is 80%. Okay, and why is that important? Because if total sales is 4,80,000, that means credit sales is going to be equal to total sales into 80%. So that is going to be 4,80,000 into 80%. Okay, and just do it on the calculator, life will be easier. Okay, less likely to make mistakes. And let's see, we have 4,80,000 into 80%. So 80 by 100. Okay, 3,84,000. $3,84,000. Okay, but that gives me credit sales. That's not something I can put in the balance sheet. But then they've told us that total turnover to total assets is 4 times. So if total turnover to total assets is equal to what? Sales upon total assets. That's what total turnover to total assets means. And I know that it is 4 is equal to sales, which is 4,80,000 upon total assets, which I do not know, but now I can say that total assets is equal to 4,80,000 upon 4, therefore total assets is equal to 1,20,000. Okay, and that 1,20,000 is effectively going to be the total of your asset side, which must also be the total of your liability side, but I'm not pushing it yet. Let's put in as much information as we can. Okay, so we are done factoring in this way to get back to. We're done factoring in this and this. Cost of sales to inventory is 10 times. Okay, cost of sales I know is 3,60,000. Okay, so cost of sales to inventory. Cost of sales to inventory. Inventory stock is one and the same. Okay, cost of sales by inventory is equal to 10, which implies that 3,60,000 upon inventory, okay, I and B for short, is equal to 10. So therefore inventory is equal to, okay, inventory is equal to 3,60,000 upon 10, basic equations. Therefore inventory is equal to 36,000. Okay, so we've got ourselves inventory. Now, average collection period is 5 days. Okay, and they're set to assume 365 days in a year. You need to understand that the average collection period is equal to 365, because they said 365 upon your debtors or accounts receivable turnover ratio. So first let's get that number. Okay, so average collection period is 5 days. Okay, so 5 is equal to 365 upon DTR, and that means DTR is equal to 365 upon 5. Okay, which is equal to 73. Now, DTR itself is credit sales. Okay, and that's why we had to calculate credit sales. Credit sales upon debtors plus bills receivable, if any. Hopefully they're just going to give us debtors and life is going to be easy, but let us see. Okay, only debtors. That means bills receivable is 0. So this implies that 73 is equal to credit sales. Okay, and we got ourselves credit sales over here. Okay, 3,84,000 is equal to 3,84,000 upon debtors. Debtors is division, goes that side, it becomes multiplication. 73 is multiplication, goes down, it becomes division. So 3,84,000 upon 73, and I'm hoping, seriously hoping, I get a round figure and not a non-terminating decimal. But time will tell. 3,84,000. Okay, here we are. 3,84,000 upon 73. And here we go. This is our first problem. 3,84,000 upon 73. And which would make you wonder whether you have done something wrong along the way. Okay. No, this seems proper. 5260 should do. So let's go ahead and put it in. Okay, and again, we should have it in proportionately. So I'm just getting rid of this and doing 5260 like this. Alright, so 5260 done. Then we have the next item. Okay, so this is done. Long-term debt, they've just given a question mark. So let's see, we'll solve it at the end. Current ratio is equal to 1.5:1. Look at sundry creditors. Sundry creditors, they've just given it to us. So I'm just going to write it down anyway. Okay, so sundry creditors is equal to 60,000. Thank you very much. And if you notice, it's the only current liability. So if I've been given the current ratio, okay, and maybe I can just squeeze it up on top over here. Let's try luck. If I've been given a current ratio as 1.5, that is nothing but current assets upon current liabilities. So I can say that 1.5 is equal to current assets. And now look at who's the only missing current asset. Sundry debtors we have, inventory we have, cash we don't have. So can we say that current assets is of X plus 5260 plus 36,000 plus 36,000, the whole thing upon 60,000, which is your creditors. Okay, and we have some space here. Alright, so 1.5. Okay, and let's see, I'm really beginning to wonder whether we can squeeze it all in. Please bear with me. 1.5 is equal to x plus 5260 plus 36,000, which is 41260, 41260, and the whole thing upon 60,000. Now 60,000 over here is division because that side becomes multiplication. So 1.5 into 60,000, 1.5 into 60,000 gives you 90,000. So 90,000 is equal to x plus 41,260. And now we can simply solve for x. Okay, so x, right, and yeah, let's do that. So x is equal to 90,000 minus 41,260. Okay, and I already have 90,000 here, minus 41,260. Okay, so 48,740. X is 48,740, which is my missing current asset, cash. 48,740. 48,740. Then long-term debt, they do not have an idea. Okay, and equity shareholders funds is 20,000. So I think that's a good time to simply put this in because there's no other data. Okay, now the only thing missing is fixed assets, but I have the total. I take 1,20,000, subtract everybody else. I'm going to get fixed assets, and whatever is the total for the asset side is also going to be the total for the liability side. So I can write 1,20,000 here as well and subtract. Okay, so 1,20,000 minus 20 minus 60. Okay, should give me 40,000. Okay, 40,000. Now, what about the asset side? Let's use a calculator. 1,20,000 minus 36,000 minus 5260 minus 48,740. And you see how magically we get a round number of 30,000. Okay, so we have 30,000. Okay, and with that, we are done with the balance sheet. I hope this video has been useful. Please like it, share it, and if you have any doubts, mention it in the comments. Also, consider subscribing. Thank you.